for today. I lost this trade today. I took on the S&P. As you can see, I was looking at Nasdaq as well, but it just wasn't offering as much as what I wanted. It wasn't offering that clean of an entry. So coming into the market, I did my top-down analysis first. I went on the daily. I kind of saw where we were at. I saw we were having this was, yeah. So I saw we had this fair value gap here. We had price come into the 50% mark and shoot back up. I saw we're back on an uptrend. As you can see here, we kind of getting consolidation and then go on an uptrend. So we had an uptrend consolidation for a week or so, I think this was, and then we're back on the uptrend. So I thought we were going to be bullish looking at that, and then I went down the 4 hour, and I kind of saw we took out these equal highs. I say equal highs actually. It's just really a high. And we had a lot of space down here, and we were consolidating a bit. Obviously, before this candle, this 10 o'clock candle, we were consolidating. And I thought, because we've had such a big leg up, and we're consolidating, maybe we're going down because there's a big gap here. So I went in the hour, looked at it further. You can see how much room was here. Even here, we only tapped into this fair value gap with this price here. So yeah, I kind of changed my bias to bearish. Looking at it now, it could have been bullish because the market is such a strong trend. But I did really have a mixed bias, but I was more bearish, to be fair. So I came into it on the 1 hour, and we had if I get rid of the Jorans, excuse all the stuff on it. Actually, I'll get rid of this for now. So, coming into the market, we had CPI. Was it CPI? No, we had NFP, average hourly earnings, and unemployment rate all out at 8:30. And as you can see, the 8:30 candle was horrendous. So this was the 8:30 candle. So I kind of saw this coming into the market, and I was like, I don't know if I want to trade today because price action was just looking horrendous. Like these candles, this 8:30 candle, and the rest of them wasn't looking nice. But I thought I'd give it a go, because there was no really draws on liquidity, because I didn't know if I didn't really want to use these as draws on liquidity, because it was just horrible. It was just a horrible candle. So I couldn't really use any London highs or anything like that, because all the London highs were around here, and price kind of swept the London highs with this NFP candle. So that didn't help my trade, first of all, because obviously I like to look for previous day highs or London session highs, or equal highs and equal lows and stuff like this. So anyway, I came into it I was still looking bearish, but I was accepted to looking at bullish trades. So we had a big move up. These here, big move up. Didn't take any liquidity out. Big move up. Oh, also forgot to mention, that candle made equal lows here, which I thought price was definitely going to go towards. So yeah, that I did think we were going to be bearish. So yeah, we came into the market, had a move up, and that created a 15-minute SMT with Nasdaq. It could be 15-minute or 5-minute, whatever you look at it. And I don't know, looking at it now, if I can class it as an SMT. This is something I could maybe learn about, because I've only been trading SMT for a week or so. But so Nasdaq came up and swept this candle, kept at 8:30, and the S&P didn't. It stayed quite below it, actually, considering Nasdaq was so high above it. So I thought we've got to come down, because we had such a big candle to the downside. And we didn't sweep these equal lows. We made another equal low, so that's 3 equal lows. So then that just confirmed my bearish move. I was like, we have to sweep. There's so much liquidity here. We got this here, and this candle here. So I thought we did have to sweep liquidity. So I went onto the 1 minute, and we obviously had that big candle down, which created 2 fair value gaps. I wanted the higher one. So I started looking at order flow actually as well, and we had this 1 minute fair value gap, and it tapped into it and came back down. So order flow was looking bearish from this move. So I started placing my fair value gaps, and I was going to do this one because, as you see, price consolidated, but I didn't want to get into the trade straight away because I wasn't that confident in price action. Although from market open, price action was quite nice, I wasn't that confident in it. So I put my fair value gap up here because we had OTE exactly here, which is why I wanted that fair value gap hit, because that's a very good confluence. OTE got hit perfectly, and obviously EQ got hit nicely. And because I was, I guess, blinded by my bias, which I've done again, which I need to stop doing, because the trades I've failed recently is because I've kind of just been overtaken by my bias, even though I knew I didn't really want to trade today from price action in pre-market. Anyway, we saw this fair value gap get hit. We had this fair value gap. So this was the highest fair value gap that needs to get hit for a bearish move to take out these lows. So we came in to the fair value gap, EQ, 50% mark, came in perfectly slotted in here, and I entered on this down candle because I thought price was going to come straight down from that. I put my first take profit at this 1 minute fair value gap. There was one here, obviously, that I'll talk about in a minute. So I put my first take profit at 1 minute fair value gap, and then my second take profit at these equal lows, and then I did want to let some price run, maybe like 15% of my price to this 1 hour fair value gap, because if I look on the 4 hour, you got this gap here, and I still think price wanted to go down here, obviously not, but so yeah, that's why I put my third take profit there, coming in the back on the 1 minute. Obviously price has consolidated and it respected this 1 minute fair value gap here. If I get rid of this, this was a strong level of resistance, and price just kept respecting it, and it didn't break through this 1 minute fair value gap. So from then on I kind of knew this trade's done. But yeah, I put my stop loss above this OTE. But yeah, my trade did fail, and I'll go through a couple reasons why I think it did, or because obviously we had good confluences here. We had order flow, kind of. The only thing we didn't have is I like to trade on a liquidity sweep, and this 8:30 candle I didn't really want to class that as a liquidity sweep. I could have classed this as the sweep, but it wasn't really a sweep from that. I like my sweeps to literally go above price quickly and come back straight back down. So I don't really like this as a sweep. But yeah, a couple of reasons I was wrong was I traded away. If I get rid of these, I traded away from a liquidity sweep. So we had this liquidity sweep here. Price, see what I mean? It's a lot quicker when it took it out. So price took this liquidity out and came up, and then we had a 1 minute fair value up here that got disrespected, and I saw that, but I thought because price wanted to head into this fair value gap, it's going to disrespect that. But it also respected this fair value gap, so it disrespected a bearish and respected a bullish. So the order flow was very bearish. Order flow was bullish, sorry, more bullish than it was bearish, just from this fair value gap. Price also went into, if I look, I can't remember where it was now. I think it was on that. I think it was on the hour. I could be wrong. No, there was an OTE that price came into. I'm just having a dummy moment. I can't really find it. Maybe it wasn't on there. I'm sure I saw it. Or it might have been on Nasdaq. It was Nasdaq, I think. Price came into OTE on Nasdaq, I think it was. Yeah, there you go. Price came into Nasdaq. S&P it didn't, obviously. But S&P took out these lows, and I traded away because that liquidity sweep should have been a bullish liquidity sweep, as it was, as you can see. I traded bearish from that, which I shouldn't do. That's not my trading plan. So I traded against my plan. I don't really know why I did that. Looking at it, order flow was bullish. We were respecting fair value gaps and disrespecting bearish fair value gaps. So obviously I'll go through it. We swept liquidity here, disrespected this fair value gap, respected this 1 minute, then had this strong resistance of a 1 minute fair value gap. And then eventually we did break this 1 minute fair value gap, but we broke it on the 5 minute. We had a 5 minute fair value gap, which obviously higher time frame, stronger. But this was after I took my trade, but we broke it with this candle. So that really would have been the entry to go bullish, and obviously its price has gone shooting up. But yeah, order flow was just very bullish, to be honest. Price just wanted to take out these lows. I just thought because we had equal lows with these lows over here, these lows and these lows, and these lows, I saw 3 equal lows. I thought price was going to sweep those out. Obviously not. But yeah, I think for my coming up trades and my next trades, from what I can learn from, it's my order flow. I need to look at my order flow, because I was only looking at my bias, and the only thing I really had for order flow was this fair value gap here and a couple disrespects here. But I don't think there was a 5 minute disrespect. No, there wasn't a 5 minute disrespect. But yeah, I also traded away from the liquidity sweep. I shouldn't do that. What I should do is, if price didn't sweep, and price did this. So imagine I'm starting here. So price does that low. Price comes up, sweeps that low, comes back down here, and then goes up into like a fair value gap. That would be ideal. Just imagine this was a fair value gap. Price has come up into it. Because it hasn't swept this low, that would be a good time to go bearish, and then it will go lower. Whereas obviously what I've done is not that. As you can see, it swept and it disrespected fair value gap. So that's something to learn from, is to not trade away from liquidity. Because obviously if I could have traded this as liquidity, and I could have traded bearish from this. So if we had price come from here, retrace into this fair value gap, which I wanted in the first place, because I kind of knew it was heading for that low, that would have been a good bearish trade. Like this one as well, we swept liquidity, kind of tapped into this fair value gap, then lower. But because it swept this, I shouldn't be trading bearish from sweeping that, really, unless it breaks structure. So unless price came, let's say up here and back down and broke structure, or that would be a market structure shift, I shouldn't be trading bearish from that. So yeah, something to learn from. Friday, so I got a weekend off. Back on Monday trading, but yeah, on to the next one.